I'm starting to feel pretty bullish on Tesla. And you might be tempted to say, well, that's because you found something bullish. That's not the case. You see, most people like to only do research on things that confirm their bias. But all I've been doing is researching why you should be bearish on Tesla. And I just think they all suck. So let's drag on over the strongest bear case I could find and put it up on the chopping block. Professor Scott Galloway made the claim that if Elon wants to keep Twitter running, he's going to have to sell Tesla stock. And if he sells the amount of Tesla stock needed to keep Twitter out of bankruptcy, it'd be about 11 billion, which would cause a cascading effect in Tesla stock, bringing the stock to new lows. And he expects the stock to get cut in half, even though the company will likely continue to perform well. But there's also a few comments here that he makes as well that I think really show how much bias a lot of Tesla holders, or at least previous Tesla holders, have in the stock right now that I'm not sure is quite justified.
Elon Musk, who's arguably the most powerful person in the world right now, spreads conspiracy theory and makes anti-Semitic comments. I think he's really tearing at the fabric of our society.
Tearing at the fabric of society. Clearly no extreme biases to see here. I don't even know where the baffling claim that Elon's made anti-Semitic comments comes from, unless he's trying to imply that since Kanye West made comments on the platform that automatically means that Elon approved of them, which is obviously a very ludicrous thing to say. But if we even just separate that, we just think about the claim of, okay, Twitter's going to go bankrupt because this company can't run anymore. Elon's not going to be able to manage it. Somehow this small little social media company is going to be much harder for him to manage than his 3 other companies that he manages, where he's building rockets that go to Mars and creating electric vehicles and doing solar power and digging tunnels under the city. No. This will be what breaks the camel's back. And no one's going to want to jump on board with him because he's now running Twitter and he's enacting free speech. Which one, by the way, Scott Galloway doesn't think that Elon's enacting free speech. He actually thinks that Elon doesn't understand the definition of free speech, which I think is silly, preposterous. But it goes to show you how much bias is being thrown into this, how much politics gets in the way of people's critical thinking. It becomes all emotion. And these emotions are why most people suck at investing. And I think that's exactly what's happening with Tesla stock right now. I don't think Elon's going to struggle at all to run this company. In fact, he's been setting industry standards. I think actually Elon's success at Twitter may cause a lot more job cuts within the tech industry as people start to realize, wait a second, this company's not actually falling apart. A lot of this has been dramatized. He's running it with half the staff. Maybe we should take a look at how much staff we have and whether these people are actually necessary and start to actually make money the way Elon is. And that's not even a preposterous claim. If you've watched previous reports, we've already talked about how YouTube was already running with half the staff Twitter was, and how Facebook also just made some job cuts, or Meta, they're Meta now. And let's be clear, I'm not a Tesla perma-bull. I put this chart actually back out in October saying that I think it could go as low as 138. And I don't think Elon's perfect. And look, at the end of the day, I think the whole bear case is centered around, well, Elon's putting all his attention on Twitter, which in my opinion just leads to the best bull case, which is actually really simple. All Elon has to do is say, I'm going to focus more on Tesla now. Twitter seems to be in good hands. We have new boards set up. We've built, our committee together to keep track of, what's okay to say, what's not okay to say. We've let a bunch of people back on. So user growth's way up. Advertisers will eventually come back once all the smoke blows over. They still want to go where the attention is. They're not going to stay away forever. Obviously, the money potential will bring them back on its own. All he has to do is say, I'm going back to Tesla. Stock goes, and actually, we're seeing signs of that on the charts. Now, I've talked about this a lot in the past, but these ABC waves, they can be really hard to actually map out, right? This is the lowest low that I would expect. It doesn't mean that I think it's actually going to hit this low. And so if it actually did manage to hit it, I would actually see it as an immediate, okay, probably time to start accumulating here because it's pretty crazy low. And we can see here on the weekly that this momentum looks pretty topped out. This is pretty aggressive momentum coming in on the weekly chart. If we look here at the daily chart, we can also see that it looks like it wants to try to turn over, and this would be expected to then bring some bullish momentum to the upside. And so when we're looking for a potential bullish movement, we look for that to start pushing over. Again, we can also see on the weekly chart, which is a multi-year chart, that we're pretty oversold already on the stock, and the same is also clear for the daily. If we compare this to the S&P, we can also see it hasn't had strong correlation with the rest of the market. The rest of the market's been in a rally. Tesla's been selling off. If there's any stock in this market that looks like it's actually started to price in a recession or some earnings depression, it seems to be Tesla, even though Tesla is one of the few that's expected to have still strong projections going into next year, which really, it's kind of building up a bull case, you know? But since we're on the topic of earnings projections for next year, let's also dig into some reports on there and kind of talk about what's going on in the greater market right now. So for 2023, analysts are projecting earnings growth of 5.6% and a revenue growth of 3.3%. Now, keep in mind, this would be the first year ever where there's actually earnings growth in a recession rather than a decline. And if we also look here, we can also get a better picture of how accurate those analysts actually are heading into the next calendar year. These blue bars are going to be what the analyst projections were, and these shaded out bars are going to be where the market actually was. And you can see most years we overpredict. And of course, by we, I mean them, because I'm always right. Always. And speaking of always being right, let's talk about what's going on with the S&P right now, because we've actually dropped below what I thought would be the lows, where we get a nice bounce into the end of the year. And instead, the market's been showing a lot of weakness. And I think this is actually completely coinciding with what we just talked about. I think these analysts have overprojected, and the market's starting to wisen up to that. And so there's a lot of fear creeping back in. Of course, like I said before, I don't think this is going to stop the rally, because usually rallies climb a mountain of worry anyways. Now, of course, the massive caveat here is, in my own personal portfolio, I said I was going to sell after this S&P hit 400, and I did just that. And on this massive rally, I also did some more selling as well. So I don't actually have much exposure to these S&P tech stocks for this final rally, even though I think it come around. I think it could make an interesting trade opportunity, but I also have hard stop losses on most of my positions right now. If we see a break below 389 from this point, I think it could be a complete capitulation from the market, and we could see a Santa plunge instead of a Santa rally. But I still find it hard to be favored for a trade to the downside, because I think all the risk here is actually to the downside. If this market starts to push back up, I think a lot of algos will start to chase and people will start to close their shorts, because I imagine there's a lot of people short right now in this market, and that could cause this squeeze potential to the upside. I still think all the risk is for people trying to short this market, because I think they're coming in a bit too early. Now, I could be wrong. This is a very dicey situation here, but that's where my gut tells me the market is headed. And now let's talk about what's been an absolute stellar trade, because I'm always right. Hopefully people are catching the sarcasm there. But bonds. Bonds have been great. TLT has absolutely been killing it. Although I did give a notification today in the Discord, hey, today was likely a great day to sell into a temporary top right here. I'm expecting another dip to come in. We're getting really heavily overbought on the 1 hour graph for bonds. I expect a small pullback. However, I'm still very confident in our March and April contracts for our options, and I think those are going to continue to print out very nicely. And if we tune over to the energy trade, I'm still really heavily convicted here. And in fact, I've been seeing some reports that the energy trade is now over. People need to get out of energy. It's gonna do terribly. I actually think that it still looks really bullish to me. Our fundamentals are still really strong, still waiting on that catalyst. I just thought it would be good to touch on this. And now for a few announcements. I have a few videos loaded up. They're still not out yet. I'm actually building those in a different editor than I'm using for this video right now, and I'm trying to learn that and master that and then use that for all future content. And that's because the next few videos should be a lot higher quality than this one, and I'm developing those skills along the way in preparation for another company that we're starting to help institutions and hedge funds create their own video content and navigate social media so that they can reach more clients and better service the clients they already have. which leads to my final announcement. I have not accepted the offer from a hedge fund to go work for them. Instead, I will continue to just be a day trader and to run the Discord, helping other people learn about markets, about investing and trading. This will still be my main focus. So I hope you enjoy this content. Share it with your friends, share it around. I think that this is a big thing. It was definitely a big decision for me to make. I think either way I was gonna win, but to turn down a nice cushy offer where I'm not having to solely focus on all my income on my own and do everything independently was pretty hard. And some people have made comments like, well, you're a day trader, you just print money on the market anyways, why do you need a full-time job? Well, yeah, I could have done that and had a salary with benefits on top of it. Okay, it's not like I could no longer trade, it was just I couldn't make content. So factor that in when you consider that I turned that down because I enjoy doing this. I enjoy helping people. I enjoy building this Discord. This is what makes me really happy. I enjoy this more than I actually even enjoy trading. I'm not even a big fan of money. I like building things. I like building this company, building these followings, teaching people. Like that's what actually feels fulfilling. The making money on the market part just allows me to have freedom, what I've always valued to begin with. And I think a lot of people have a better understanding of how my journey's been, how I got to where I am today in the video coming out soon where I talk about, how I became a trader. So make sure you stay tuned for that. So that's just a small update on what's been going on. I hope you enjoyed this video and I'll see you on the next one.